Real rates are crashing, which is why gold and silver should be going through the roof. The biggest bull markets for precious metals are when silver leads gold. So we already went through the first leg where gold led silver, and that leg got us to $5,000 gold. This new leg where silver is leading gold is going to get us to 10,000 or higher gold, but much, much higher silver. In fact, intraday, silver got to over $89. They said that you should sell all your gold stocks, not just AEM. Time to sell the gold stocks. And this is a great buy signal. It doesn't get any better than that. I did get a little nervous. Donald Trump came out and now he wants to make it permanent that large corporations can't buy residential real estate if they already own 350 homes. They cost a hell of a lot of money to maintain. Life is a lot cheaper when you're renting. With times as tough as it is, a lot of people can't buy a home. If all you could do is get a job at McDonald's, you have no business buying a house. You have no business starting a family. You're not going to pay $70 for a hamburger. Real rates are crashing, which is why gold and silver should be going through the roof. Now, what happened today, though, even though gold and silver went down, gold didn't go down that much, and silver didn't stay down. In fact, it rallied a couple of bucks positive. It recovered its losses and went positive. In fact, intraday, silver got to over $89. Let me see where it is right now, because it's pulled back intraday, and now it's 88.20. So, but it's still positive on the day and up another 80 cents tonight, despite the fact that we got the hotter than expected PPI number. Now, of course, the hotter than expected PPI number is actually bullish for gold and silver. It's just that traders don't realize that yet because they're still fixated on what the Fed might do with interest rates in a nominal sense, and they're missing the bigger picture with what's actually happening in a real sense. And gold's up about 15 bucks. So we're back above 4,700, but you have a lot of resiliency here. But we are very close to gold and silver prices exploding, even with hotter than expected inflation numbers. And then the hotter than expected inflation numbers will be bullish for gold and silver because the Fed can't react. Again, even if the Fed hikes 25 basis points, 50 basis points, means nothing. The Fed needs to hike 200 basis points, 300 basis points. Do you think that's going to happen? I mean, well, Trump would blow a gasket. He'd have to fire everybody at the Fed. In fact, I'm surprised he hasn't already fired whoever it was that released the PPI numbers.
The Fed keeps talking tough on inflation, while real rates quietly collapse beneath the surface. As Peter Schiff points out here, silver refusing to stay red after a hot PPI print matters far more than the headline itself. Markets are still reacting to imagined rate hikes, while ignoring the political reality that aggressive tightening would detonate debt markets and Washington's deficit spiral. That disconnect is exactly how institutional money positions before retail understands the trend reversal. Next, Peter Schiff reveals why silver leading gold may be the signal Wall Street hoped retail would ignore.
Maybe it's because he knows no one really watches the PPI numbers. Right? So there's probably going to be a lot of pressure from people at the, that keeps the statistics if they want to keep their jobs, right? Because Trump, he already has a history of shooting the messenger when it comes to bad inflation news. But I've been talking about the underlying strength in silver. Silver has been very strong. It has been, more resilient than gold. Even when gold is down, silver is up. So silver is now leading gold. And as I've said many times, that is bullish. That is better for precious metals than when gold is leading. The biggest bull markets for precious metals are when silver leads gold. So we already went through the first leg where gold led silver, and that leg got us to $5,000 gold. This new leg where silver is leading gold is going to get us to 10,000 or higher gold, but much, much higher silver. And again, this is not just a precious metals bull market. It is a metals bull market. Copper soared, hitting a new all-time high today, even though it ended up down slightly on the day. It hit a new record. above $6.70 a pound for copper. Think about this. Donald Trump talks about how bad the inflation was under Biden. Well, Biden was president for 48 months, right? 4 years. During that time, copper prices rose by about 17% during the entire four years Biden was president. Trump's been in office now for about 16 months. And during that time, copper prices are up almost 70%. 70%.
Copper hitting record highs while officials claim inflation is cooling is not a normal market signal. According to Peter Schiff, silver outperforming gold historically marks the phase where institutional capital begins rotating aggressively into hard assets before the public catches on. The overlooked number here is copper surging nearly 70% in just 16 months, exposing how commodity inflation is accelerating faster than official narratives admit. Savers sitting in long-duration bonds or cash are absorbing that silent devaluation in real time. Next, Peter Schiff exposes why the metals rally is broader than gold, and why that changes the entire inflation story.
Now, I know some people say, well, that's just copper. Well, you know what? There are a lot of other prices that are going up. But copper is a pretty good bellwether of inflationary pressures in the market. So how could he say with a straight face, or anybody, that inflation is so much lower now than when Biden was president, when you have copper up so much more? In fact, it's not even going to stop. This is going to be a huge move. Copper is the new silver as far as where the prices are likely to go. But oil, over $100 a barrel. I think we're $102, $103 a barrel. Those prices have a long way to go because the Strait of Hormuz is a long way from opening. But wait until the dollar rolls over, and Forex traders realize this. One of the biggest mistakes you can make in technical trading is to anticipate a head and shoulders top, because most of the time you're going to be wrong and the markets are just going to go and make new highs. So you're supposed to wait for the break of the neckline, for the confirmation of the pattern before you do something. And of course, CNBC, I guess they didn't learn that, and they're trying to anticipate it. But then they said that you should sell all your gold stocks, not just AEM. Time to sell the gold stocks. And this is a great buy signal. It doesn't get any better than that. I did get a little nervous about, not nervous because I don't really care. I'm not selling.
Markets are celebrating disinflation, while copper and oil behave like the currency system is already cracking underneath them. What Peter Schiff is highlighting is that media analysts are calling tops in metals before the dollar has even begun its real repricing phase. Historically, commodity breakouts combined with premature bearish sentiment create the conditions for violent upside moves that trap underexposed investors. The danger for portfolios is assuming mainstream optimism around equities can coexist indefinitely with surging input costs and weakening purchasing power. Next, Peter Schiff unravels why bearish calls on mining stocks may actually confirm the next leg higher.
But when gold and silver were at the highs and the gold stocks are on the highs, the same guys on fast money couldn't be more bullish. Buy, everything is great. So that, as a contrarian, I didn't like to see all these guys that used to be naysayers and skeptics and make fun of me, now all of a sudden recommending the same stocks that I own. So I was a little uncomfortable. I'm a lot more comfortable now that they're telling everybody to buy the stocks that I own, because they are the contrarian indicator. So you want to load up. The news could not be more bullish for gold and silver. You want to go to Schiff Gold and back up the truck, guys, and buy gold and silver, physical gold and silver. Get a T-Gold account. If you don't already have one, you can just go direct to tgold.com and buy these precious metals mining stocks if you want to take a risk. The upside potential dwarfs the downside risk. I think it's the best risk trade. Yeah, you can try to get into this AI bubble and hope that you get out before it pops. I wouldn't want to press my luck there. I'd rather buy these mining stocks that are in the opposite of a bubble. There's a bubble of pessimism in these stocks. The bubble is in the opposite direction. They're too cheap. They're crazy cheap. And that's what I want to buy, right? That's where I want to put my chips, right? I think I got much better odds there than I would getting into the tech stocks here.
The biggest danger to retirement portfolios may not be owning too much gold. It may be owning none while everyone crowds into AI momentum trades. Peter Schiff's argument suggests the real asymmetry now sits in deeply unloved mining equities, while speculative capital keeps chasing expensive tech valuations, disconnected from monetary reality. Historically, sectors dismissed as dead money before liquidity stress cycles tend to deliver the strongest repricing once confidence breaks elsewhere. That matters for investors depending on inflated index exposure to preserve purchasing power over the next decade. Next, Peter Schiff reveals why media pessimism around miners could become the fuel for a violent institutional rotation.
You know, Donald Trump came out and now he wants to make it permanent that large corporations can't buy residential real estate if they already own. I think the cutoff is 350 homes. You can't buy anymore. And Donald Trump was saying that houses are for people, not corporations. And, you know, I hate it when people say that, when they say corporations are not people. Who the hell does Donald Trump think owns those corporations? They're people. The shareholders are people. It's just a group of people that got together. And so if people have a right to buy homes, they have a right to incorporate and buy homes. The whole thing is nonsense. But what about the people who want to sell their homes? Don't I have a right to sell my home to whoever I want? Who is Donald Trump? Who is the U.S. government to tell me, hey, you can't sell your house to a corporation if they already own 350 homes? Why not? What if they offer me the best price? Why can't I take it? It's my house. I should be able to sell it to whoever I want. This is all a bunch of socialist BS, right? You can't talk about, oh, AOC, the Democrats are socialists, and then overlook socialist policies being advocated by the Republicans. Hypocrisy does not help our cause. It gives the enemies of our cause a weapon to use against us. Plus, what about people who don't want to buy homes? What about people who want to rent? If you don't want to buy because you don't want to deal with all of the costs of home ownership, which, believe me, I own a lot of homes.
Housing policy shifts always arrive after affordability damage is already irreversible for the middle class. This is where Peter Schiff's thesis shifts from monetary inflation toward government intervention, distorting already broken housing markets even further. Limiting institutional ownership sounds populist on television, but the timing exposes policymakers scrambling to manage public anger after years of currency debasement, inflated real estate beyond wage growth. The overlooked risk is that restricting supply pathways can tighten rental markets even more for ordinary families already stretched thin. Next, Peter Schiff reveals why political solutions to inflation often deepen the very crisis they claim to solve.
They cost a hell of a lot of money to maintain. Life is a lot cheaper when you're renting. And, you know, with times as tough as it is, a lot of people, you know, can't buy a home. In fact, I was reading articles now in some cities, if you make $100,000 a year, you're lower middle class now. Lower middle class. I mean, I remember when if somebody made $100,000, they were rich. Now, if you make $100,000, you're barely not poor, right? So a lot of those people want to rent. They don't want to buy. Well, if you limit corporations' ability to buy homes and rent them out, you diminish the pool of rental properties. And so rents are higher. What about, so you're hurting the people who want to rent. Now, I don't know, you know, maybe if, you know, the limit is 350 houses. So I don't have one corporation that buys, you know, I have 2 or 3 or 4 corporations and I buy houses. I mean, obviously, there's always ways to get around these numerical caps, right? By having multiple companies. I don't know all the intricacies of the law, but it's all misguided. And it's all socialist rhetoric when you start saying corporations are not people, because they absolutely are people. You know, because a lot of people would say it's, you know, businesses need to pay a living wage, especially like they would talk about, we need to raise the minimum wage, because these restaurant workers are being paid, $7 an hour, $10 an hour, whatever it is. And people would say, look, that's not enough to raise a family. That's not enough to pay a mortgage. And my response would be, of course it's not enough to raise a family and pay a mortgage.
The government says inflation is under control, yet six-figure incomes now struggle to maintain what used to be a middle-class lifestyle. Peter Schiff notes that rising housing costs and shrinking purchasing power are symptoms of long-term monetary erosion. Policymakers refuse to acknowledge directly. The contradiction is glaring. Officials blame corporations or wages, while avoiding the currency debasement and asset inflation created through years of easy money and deficit expansion. For savers nearing retirement, that means traditional income benchmarks no longer measure real financial security accurately. Next, Peter Schiff exposes why wage debates distract from the deeper collapse in purchasing power most Americans already feel.
If all you could do is get a job at McDonald's, you have no business buying a house. You have no business starting a family. These are entry-level jobs that are not designed to support a family. They're actually designed for kids who are being supported by their family. People who work at McDonald's, they could still be living at home. These could be high school kids earning money after school, college kids. These are not jobs for people trying to support a family. That is ridiculous. And you can't say that a guy who runs a small restaurant is responsible for making sure that the waiters and the busboys earn enough money to pay mortgages and to support families. That is absolutely absurd. But what I used to do, my joke was, or I would explain is, what would happen if I decided to open up a restaurant and do exactly what all these bleeding heart, socialists claim that I should do? What if I opened up a hamburger restaurant and I said, you know what? I'm going to pay the cooks, right? The guys that flip the burgers and make the French fries. I'm going to pay the waiters. I'm going to pay the busboys. I'm going to pay the guys that clean the toilets, right? And sweep the floors. I'm going to give them all $50 an hour. I'm going to make sure that everybody who works for me can afford to support a family and pay a mortgage, right? Let's say I did that. But now, how much do I have to charge for my burgers? $50, $75 a burger, maybe $20 a milkshake, right? But I would say, look, the prices are really high.
Small businesses are being squeezed from both sides while policymakers pretend wage mandates create prosperity out of thin air. According to Peter Schiff, forcing artificially high labor costs into low-margin industries simply transfers inflation directly onto consumers already drowning in higher living expenses. The hidden reality is that corporate giants survive these policies through scale and automation, while smaller operators quietly disappear, concentrating even more economic power at the top. Investors watching labor policy should understand this feeds a long-term inflationary pressure rather than solving inequality. Next, Peter Schiff points out why consumer demand ultimately determines wages far more than political slogans ever will.
They're much higher than all these other restaurants, but all these other restaurants are exploiting their workers. All these other restaurants are not paying a living wage. I'm paying a living wage. I'm a good guy. I'm paying all my workers. And so that's why my prices are so high. And I was going to call it like the liberal cafe, although my wife would get mad at me because she hates it when I call left-wing people liberal, because in the classic sense, they're not liberal at all. It's a bastardization of the term. I'm a liberal. I'm a classic liberal. I mean, the liberals co-opted the whole term, but since everybody thinks that's what liberals are, that's why it was going to be the liberal cafe. But so I was going to have this liberal cafe where we had really, really high prices, but I paid really, really high wages. How many of these bleeding hearts do you think would eat at my restaurant? Nobody. Nobody would come to my restaurant. I would go out of business in a heartbeat. And so all these people that I was going to pay $50 an hour would end up earning nothing an hour. Now, why would they earn nothing an hour? Because they'd be unemployed, because nobody would want to pay the money. They would like, no, I'm not going to do that. I'm not going to pay $70 for a hamburger. All right, well, how much do you want? I want to pay $8. Okay, you want the $8 hamburger? Then don't get mad at me because my waiters can't afford a mortgage. Because if you're going to demand that my waiters or cooks can earn all this money, you got to pay it. The customer has to pay it. So the reason that wages are so low in restaurants, it's not because the restaurant owners are greedy, evil capitalists. Hell, I mean, they'd love to pay their waiters more money, but they can't. Not if they want to stay in business. It's the customers who are mean. It's the customers who are greedy. They want low costs. That's why the wages are low.
Consumers demand cheap prices while simultaneously demanding higher wages, and that contradiction eventually breaks entire industries. What Peter Schiff is highlighting is that inflation cannot be legislated away because every forced cost increase ultimately flows downstream into prices, layoffs, or business failures. The uncomfortable truth is that central banks created the affordability crisis through years of money printing, yet public anger keeps getting redirected toward employers and small businesses instead. For long-term investors, that policy confusion matters because it accelerates currency debasement and economic instability simultaneously.